One of the big highlights, though, is a monster ramp in MongoDB after earnings. Software back, baby, if it ever went anywhere. Joining me, Nigam Arora is the founder at the Arora Report. Nigam, great to catch up with you again. Good timing with some action here in the market, trying to hold on to recent gains. How are you, sir?
Good, Oliver. How are you?
Pete was thinking the same thing. You were watching MDB just take off like a rocket ship. It's a pretty good chart. It's a pretty bold one. Tell me what you see and why this was such a blockbuster report.
Well, so several things. So first of all, I want to give some perspective. So we have something called a core model portfolio, and we've been holding MDB in this for a long time. We have now over 1,500% gain. I mean, that's easy to say, but it's nice to see. So they reported earnings. Earnings were much better than expected, but the earnings really do not justify the 23% move we're seeing. It went a little bit higher earlier and pulled back. So what's happening is there have been a lot of shorts in this stock, right? This is a database stock. The dominant player in database is Oracle. So the thinking was that Oracle has, done better, and MDB is going to get hit. But that's not what happened. On every metric you can say, new customers and so on, they did well. And Oliver, you've been around, so you know what happens when a short squeeze happens, right?
So all those that's clearly there's a little added pressure on it today because of that, right?
So everybody was really short, Well,
who was down? Why were they down it? I mean, I know that this has been, of all the software companies, it has been a fairly volatile one. If we look at the 3-year chart, massive gaps on this, right? So, and it's earnings based too. So it seems like the market has these moments of high confidence and then very low confidence, like in the earnings from the spring, that caused this big sell-off down to almost 140. So this is the second or third quarter, really. Actually, maybe even fourth, because there's a big candle, right there as well in June. This thing always moves on earnings.
Yeah. So this is a classic stock which short sellers target before the earnings. Okay. Every quarter. And where you see on the left side of your chart there, a big red candle, and earnings don't come out, then the short sellers press the pedal even more, right? So it goes down a lot more, you would think. And then if earnings are better than expected, then of course shorts have to cover, then you get short squeezes. So that's why, in the middle of the chart on the right-hand side today, you see those big candles. So that's the issue. Where you're showing it dipped 100 and something, 150 something, we were buying there again. So the way you do it with this stock is, I think ultimately this stock is going to get bought out someday. Not tomorrow, maybe a year from now, 2 years, who knows? And it has a potential. It's 400 now. It has a potential to go to like 600, 700 even. But you don't buy it here. The risk is too much. So we have something called Aurora buy zones, and our buy zones are much, much lower. So you wait for a bad quarter when short sellers are pressing, then you buy it, and then you hold on. That's, I think, how you play the stock.
How much lower do you think, Nigam? When do you run to buy? Is it at that old level, 325?
No, I would, because next quarter, I tell you, if the earnings are not good, meaning even they miss slightly, the support that you see, and Oliver, I know you're so good about technicals and supports, the resistance, the support that you see in the chart, that's going to break. So you're going to come down quite a bit below that support. So that's where I would want to buy. I would be very patient. I would wait for the support to break that you're showing there.
So MDB cracks 325 and you just start piling money into this bad boy. Is that the message I'm hearing?
I think it starts getting close to 300 to 250. It trades in a very wide range. I would kind of start scaling in, I think, if that's what happens. If not, then, we have our core position. I think we're long, I have to double check, but I think we're long from like $24 or something. And we keep on holding our core position, And one other thing that I always look for as a kicker is, can a company like this being bought out? This is a kind of standalone database company. There aren't that many. And I'm an engineer, right? So I used to have a partnership with a company called Informix. another partnership with a company called Sybase, both for pure database companies. Both got bought out. So the database company, pure database companies get bought out. So one of the things we've done at Aurora Port for our members is buyouts. So think about it. To date, 217, that's 217 of our portfolio companies have been bought out. That's a lot,
Yeah.
right?
You
And
think
I
that kind of
expect,
puts a floor under it? How low can it go
yeah, that puts
before
a floor, and you
somebody's
buy and you
interested?
hold on sooner or later, So I think I expect MDB is going to be bought out. I don't know. I can't tell you when it's going to be bought out, but I think it will be bought out. So the way you do that is the way we have done it, right? We have core position from $24 or something. We're sitting on a 50, 100% gain. We don't touch it. We leave it alone. And then if it comes down, as I said, 250 to 305 or somewhere in that range, somewhere because they're bad earnings, we'll start buying it again as what we call the trader on position.
Okay.
And the trader on position, then the next earnings, when there's a short squeeze, we sell into it.
Okay.
So, that
Got
way
it.
we're taking advantage of short term and long term both at the same time.
What else from the kind of juicy world of AI adjacent trades? I just pulled up the quantum ETF, which is kind of, it's a good fund in terms of capturing what it wants to, but it also kind of mutes the swing of the underlying companies that are big in the quantum space. Nigam, where do you stand on that theme, on that sector right now?
So I think quantum has a potential to be very, very big. The thing that most investors don't realize that quantum is not just one technology. Okay, there are several different technologies in the quantum that are being used. Okay, the dominant is superconducting, but there are ions and so on and so on. There are like 6 or 7, 8 different technologies. And right now, we don't even know which technology is going to be dominant, right? And I don't like this particular ETF, quantum ETF, because it has a lot of stuff that makes no sense to me.
Hey, it's 33% on the year, though. Can't hate that.
I know.
Can't
So I
hate
think
that.
I think in the quantum, if you want to play it, you got to own, like 3 or 4, 5 different companies, smaller positions. And if you can pull out a chart of something like RGTI,
Okay, we got it.
yeah, Rigetti,
You like
and
buying this dip down here?
not yet.
Really?
We may buy it if it goes a little bit lower. Now the thing is, we own it from where just before the rise started. Okay, we sold some not at the 59.60, but we sold some around I think 49.50, $49, $50. Still holding the remaining. So the same concept, right? You hold small positions for a very long time, and every time it comes down. Now, what I would do on this quantum one, you see the chart, you see the support. If it breaks the support, now see, I play it somewhat differently, right? Everybody waits for support to when the support breaks, they sell it. That's where the stops are, right? But if you have good, this is a thematic company, and if the fundamentals are okay, and you really want to buy it, then what I do actually is I wait for the support to break because I know everybody stops are right below that, right?
Okay.
So those stops hit, there's more selling pressure, short sellers come in, they push it down more, and then you buy it, right? So that's kind of how I like to play with quantum.
Okay, fair enough. I know you like stocks.
I do.
You like individual companies. I'm going to give a tiny bit of love to quantum though, just for a second, because I'm just kind of looking at the holdings in there, and you get a pretty good representation, I think.
Yeah,
So
you do.
it's just some of these are kind of. It's a different mentality, right? Going for the basket versus trying to pick the stocks. I know you like the higher octane game of, hitting the stocks, but I don't hate the basket approach for this category because I don't know which one of these are going to make it through and which ones are too much hype.
So here's the thing. So let's say I'm playing the AI game, right? So we have one service we call 0x allocation, which is only ETFs, and very popular among investment advisors because they don't want to deal with individual stocks; they just want ETFs, right? So we have ETF called AIQ, Apple
Oh
Ida
yeah,
Queen, AIQ,
yeah.
right? That has done well. Now I look at his holdings, and I look at it 70-80% of his holding I would buy as individual stocks. So I love it, right? The problem with this quantum thing is it has all the things like Oracle. I thought I just saw it. Oracle is not big in quantum at all, right? It's a huge stock, but it's there. So this is not going to capture the upside move. When I look at it, if something really big breakthroughs happen and so on, this ETF is not going to capture them.
Okay.
So it's just not structured properly.
If I could it looks a lot like QTUM, yeah. They look very similar.
Yeah. So, I mean, I often think about all these things. I say, I should go on the ETF business because I could structure a much better quantum ETF.
Sure. All right. Well, hey, I mean, to each their own. It's free market, baby. Give us the Arora ETF.
There you go.
Hey, Nigam, close this out real quick on a macro thought before I bring in Scott Bauer to talk some more about the big picture stuff here ahead of economic data tomorrow. I know you're watching the Japanese yen. Obviously, that's a close trade next to the dollar. You're essentially trading the dollar, given how much impact that has. But obviously not entirely. Japan's kind of got its own situation. And I feel like a week ago there was a lot of panic around their economy and kind of the narrative about what sort of interest rate pressure they've been able to handle or not. But I look at this chart and I think, maybe there's potential. I mean, I don't know, Nigam, you give me the take. It just bounced off a year-to-date low. To me, it's hard for me to want to short the dollar much further, but I could see an argument maybe that this last couple months of dollar strength could be prepared to fade a little bit. Give me a quick 60-second thought on your currencies.
Yeah, so I think in the long term, yen is undervalued by as much as 20%. But in the short term, you're right. I wouldn't short it. I wouldn't buy it. We do have a position in yen, kind of a long-term position. We kind of hold it. I wouldn't do anything, but I would keep an eye on it and the JGBs, right? Yields on JGB yields, because there's almost $1 trillion in carry trade, and a lot of that has gone to AI trade now, not just buying fixed income in the United States. So if the JGB yields rise much further, I think carry trade could blow up. And if it blows up, we got 10, 15, 20% down in the AI trade. So I think that's where I would look at.
Okay, interesting. All right, so maybe some currency volatility potentially on the way. Looking and waiting to buy dips in your favorite tech companies. Great to catch up, Nigam. Thanks a lot as always.
Okay, nice to catch up, Oliver.